There's a lot to learn about trading stocks. It can be a complicated process, and there are many ways to approach it. However, there is one golden rule that will help you get through all of the ups and downs that come with being a trader. Don't panic. If you're new to trading, here are some tips on how to make sure your first foray into this exciting financial world goes smoothly. But before we get started, let's first identify the types of traders so that you may know what type of trader you are. What are the types of traders? There are 4 types of traders. Swing traders hold positions for a couple of days or weeks at a time. They're not interested in holding on to stocks for years on end, but they don't have the patience to trade intraday either. Swing trading is usually done by large institutions and high-rolling individuals. The minimum stake is usually $5,000 or more. Day traders stay in and out of positions multiple times during the course of a single trading day, often within minutes or hours after opening their position. Though it's possible to do this with margin accounts, which allow you to borrow money from your broker, most day traders maintain cash accounts where they can control their risk more easily since there aren't any loans involved. Day trading requires focus and discipline. If you get distracted while making trades, you may miss out on opportunities that could cost you big time later on. Position traders hold stocks over periods ranging from several months up to several years. Usually longer than swing traders, but shorter than buy and hold investors who want steady long-term growth potential from their investments. Now that we have that out of the way, let's take a look at the 7 tips to trade stocks for maximum profit. There are 7 tips to trade stocks for maximum profit. These include: Number 1, know how to identify the right stocks. To know how to identify the right stocks, you should first know the company, industry, sector, and market. The company has a lot of information about its operations and financials that can help you decide whether or not it is worth investing in. We have created a video about the 5 insanely profitable stocks. You can click on the link up there, or just watch it after watching this video. The link is also in the description below this video. Information like revenue growth rate, profitability, debt ratio, and so on can give you an idea of how well run the business is. Information about the industry will also help in identifying the right stocks at any given time. As an example, if there has been an oversupply of oil because of too many drilling rigs being used by oil companies, then this could mean certain companies will perform poorly. This is due to low oil prices or supply shortages. Both would cause demand for their stock. Number 2, understand valuation. Valuation is the process of determining the value of a company. It's not as simple as looking at its stock price, because there are many factors that go into determining what makes a company worth more or less than its current share price. These include earnings per share (EPS), cash flow from operations, earnings growth rate. The goal when evaluating a stock is to determine whether it's being priced too high or too low relative to its intrinsic value. Number 3, know your time frame. A successful trader knows that it is important to know your time frame. As a trader, you'll have different goals and objectives. If you are an investor who wants to keep their money invested for the long term, then patience is key. On the other hand, if you are an active trader or intraday investor who needs quick profits from their trades that day, then being more active is necessary. For example, if AAPL stock shows resistance above $150 and breaks down below $140 on heavy volume, it could signal a short-term downtrend in price action. However, this doesn't mean that Apple Incorporated has hit its bottom yet, or even close. In order to determine if AAPL has hit its bottom or not, we need longer-term confirmation by looking at both weekly and monthly charts, which show more accurate price patterns over time periods much larger than 1 year, but still less than 10 years. Number 4, stick to a plan. Having a trading plan is essential to your success. The key to having a good one is that it should be specific, measurable, realistic, and achievable. You must also be flexible when making changes to the plan depending on how the market performs over time. When writing down your goals for each trade, make sure they are specific so that you can easily monitor whether or not you have met them. For example, over the next month, I will buy 100 shares of IBM at $150 per share. Tip 3. Write down your goal for each trade and keep track of your progress throughout the day, week, month, and year so that you can measure yourself against what was expected from the start. Number 5, be aware of market cycles. In order for you to make the most out of your investment decisions, you should be aware of market cycles. The market has its own seasonal patterns that repeat themselves every year. In fact, these repeating seasonal patterns can be identified by looking at historical data and analyzing how the market performed in different periods over time. The good news is that this information is readily available for anyone who wants it. All you have to do is look at historical data from previous years and see how stocks performed during each season or otherwise during those times. This way, when next season comes around again next year, you'll know what's coming up ahead of time so that your expectations are aligned with reality. And thus, maximize your profits while minimizing any loss potential if things don't go according to plan, just like we've done here today. Number 6. Don't forget to sell. When it comes to selling, remember that knowing when to sell is just as important as knowing when to buy. You should always take into account when the stock has hit its peak and if it's likely to fall in the future. As a general rule of thumb, if you made an initial profit of 50% on a stock, you wanted $100 and sold at $150. Then sell it on your next trade. You don't want to risk losing everything by waiting around for something better. Also, keep an eye out for market trends. If you see that all other stocks are going down while yours keep climbing higher and higher, don't be afraid to cash out early. Now that you've watched this video this far, subscribe and leave a comment saying I subscribed, and I will personally reply to your comment. Now back to the video. Number 7. Consider a professional advisor. A professional advisor can help you determine which stocks to buy and when to sell them, so that you don't have to do all the research yourself. A bid advisor will also be able to provide advice on how much money you should invest in each stock and how much risk you're comfortable taking on. There are plenty of advisors out there who are willing to work with people at every level of experience, but it's still up to you as the investor to shop around and make sure they're providing quality services at a fair price. Check their website for firm profiles or reviews from other clients before deciding who will best fit your needs as an individual investor. Which type of trading is most profitable? The answer depends on your personality and what you're looking for in a trading strategy. If you're very patient, position trading works best. If you like to make decisions quickly and see results right away, day or swing trading may be the way to go. What is the golden rule of trading? This is a bonus tip. The golden rule of trading is to buy low and sell high. This means that when the market is down, you should be purchasing stocks for investment purposes. The more you hold on to your shares, the more profit you can gain from them once the price goes up again. For those who want to start trading real stocks but don't know how much they should invest in each company or what kind of stocks will make their money, there are some steps they can take before they begin investing in any shares at all. Find out how much money you have available to invest in stocks. Decide on how many companies you want to own stock in. Research each company before investing in anything. Conclusion. Trading stocks is a great way to earn money, but in order for it to be profitable, there are many factors that need to be considered. The first thing you should do is decide which type of trader you want to be, aggressive or conservative. Then make sure that you understand the basics of how stocks work. You should also have a plan for when things go wrong and keep track of your progress so that over time you will get better at investing in stocks. And that's it for this video. Thanks for watching.